Good night guys and welcome back to YouTube channel of CastAwayTrader. And today we have a video about LYFT and in general about those hot IPOs. And I promise you this video will blow off your mind. Before we start, I want to remind you that I have a website www.CastAwayTrader.com where I post regular updates and where you can subscribe to regularly updated microcharts of US stock markets and crude oil and natural gas and setups of bottoming value stocks. Now I want you to read that important disclaimer before we start. Okay, let me start from the 5-wave up fractal as proposed by harmonic Elliott wave theory. Harmonic Elliott wave theory is the only tool I practice in my trading. That 5-wave up fractal is a backbone of any rally, and it was initially proposed by Elliott in 1930s, and then Jan Kopsy, FX trader, proposed some modifications in 1990s. The main idea is that any rally is subdivided into 5 waves: wave 1 up, 2 down, wave 3, wave 4 down, and wave 5 up. And as you can see, waves 1, 3, and 5 push price in direction of the main trend, and waves 2 and 4 are temporary pullbacks, counter-trend moves, corrective waves. Many people ask me after my previous videos what they understand the idea behind 5-wave fractal, but why we need it, why we need to identify it, and what normally happens after. And this is a great question, because together those 5 waves combined and create one wave of a larger degree, a wave, impulsive wave in direction of the trend. And once those 5 waves play out, it's time for a corrective wave of a larger degree. And a corrective wave of a larger degree normally is subdivided into 3 major legs: A down, B up, and C down. And there are different structures of corrective waves, and in my course I explain each of them with real-life examples. Now let's talk about LYFT. What you can see here is LYFT has been following one of the corrective structures. It dropped in wave parenthesis A, that flat corrective move up, counter trend move up in wave parenthesis B up, and the final strong drop in parenthesis wave C down. And that drop may basically has 2 targets. Target 1 is in between 51.70 and 51.20, and the lower target, which I personally prefer, is in between 48.40 and 48.30. Now you could tell me, wait a minute, so you're showing me a corrective ABC down structure, but what about the preceding rally? Why we didn't get it? And this is the catch, guys. Yes, normally we have that ABC down, by the way, could be only the first leg down in wave A down. But what about that structure? Where is that rally in LYFT? And that rally, guys, was not for you. That rally was not for retail investors. That rally was played out by venture capitalists who had been financing the company since 2011. Let me show you that chart. This is where 5-wave up rally happened from 2011 until 2019, then that IPO happened. Those guys, those funds and companies which financed the company LYFT through capital injections over those years, they are beneficiaries of that 5-wave up rally, and they offered you those shares when that 5-wave up rally got exhausted and completed. Now, this is where we got our IPO. And after the 5-wave up rally, we should get a corrective structure, A down, B up, and C down. and after a corrective structure gets completed, then they get another rally which would also be structured as 5-wave up, targeting a new higher high. Now I want to show you a couple of examples so you would understand I'm not lying to you and I'm not making it up. Facebook made IPO in May 2012, and on the first day of IPO the shares reached the top of $45 on May 23, 2012. Then we got ABC of A down, a corrective pullback and B up, and a sharp drop with an impulsive structure. An impulsive structure means that it is subdivided into 5 smaller waves, 1, 2, ABC of 3, 4, and the 5th wave, which together composed a corrective structure ABC. So as a result, the price dropped from $45 to $17.55. Another example, Alibaba. So we are looking at the chart from September 14 until February 15. We can see that in this case we still had the final rally which topped in November 2014 after IPO was placed, and the top was at 120, and we got the very same corrective structure, A down, B up, and C down, from $120 in November 14 to $57.20 in September 15. And I want to show you again that micro chart of LYFT. We got A down, B up, and C down, and here is the catch. So those ABC might not be the whole ABC needed to correct that huge rally which started in 2011 and topped in 2018. So once we complete that first drop structured as A down, B up, and C down, though it might be only the first leg down in a large wave A down, then we may get a pullback in B up which might not reach the top which we saw on the day of IPO, and only then we can get another impulsive looking drop structured as 5 waves down to a new lower low, and together that large A down, B up, and C down may retrace a substantial part of the rally which was enjoyed by venture capitalists over the period from 2011 until 2018. And only then it would be a smart time to go and invest into that hot stock LYFT. Today I read an interesting question from a novice trader, and he asked what trading method is the best and what books he should read to learn trading. And in my personal opinion, it's not the right question, because the right question is from whom you are going to learn. I strongly recommend you guys to find a method which can be taught by a live trader who will be willing to share with you the way how he trades it. He will show you how he does it on a daily basis, because you need to find a mentor who wants you to grow, who would be sharing with you and who would be supporting you. It will take you a long time to get proficient in trading. Over that period of time you will have to work hard, where will be a lot of stressful situation, and you need to see someone in front of you who has been consistently applying that method with some sustainable and positive results. You have to find someone who will be a source of confidence in you, who will be showing you that you really can apply that method and you can make money in that method. And otherwise you will be switching from one method to another one, you will be reading new books, you will be looking for something new, because we always like something new. And every time you switch to something new, your confidence goes to zero, because you have to start from scratch. Finally, please find someone who's crazy about what he's doing. You need to see someone who loves to talk about his method, who will be talking, making you tired. Finally, please find a mentor, a trader who understands that trading is not the most important part in your life. You should get your life back from trading, because we do not live for trading. We trade to live our personal lives, to spend time with our families. Finally, please stay away from gurus who trade secret indicators and cannot explain what they are doing and why. Believe me, they do that not because we don't want to share these secrets, but because they cannot explain, they don't understand themselves what they are doing. They don't have a clear structure in their mind. They just may trade based on gut feeling, and you're not gonna learn anything from them. Let me remind you that I have my personal course, which is called Predict the Market with Harmonic Elliott Wave Analysis. I've done the same research, I've gone through the same path as probably you are going now. I read all those books, I subscribed to many gurus, and the only way to trade I find was Elliott Wave theory. And then I discovered the Harmonic Elliott Wave theory, a modification of the classic one, which was even better for me. And you may ask me why I recorded that course. And frankly speaking, it took me 6 months last year to record it, and it tremendously helped me to improve my personal trading, because I had to research that method. I had to find a lot of examples. I put on paper my ideas, and then I had to check them with charts, and in the end I just realized that how confident I became. So that course, working on that course, made a lot of money for me, and it made me much more confident than I used to be. In addition to that, my mother used to be a teacher for 25 years, and when I was a kid, she would take me to a school, and I had to stay in a classroom for several hours because she didn't want and she could not leave me at home alone. And probably teaching is in my DNA, guys. I really enjoy the process. Finally, as you may have seen, my regular price for the course is $99.99, and I offer you a special 30% discount, so you may pay only $69.99 for a lifetime access to the course for about 100 videos, 6.5 hours long, with a lot of practical tests. But what is really important, you're gonna get 30 days of private live chat for free. You will be able to ask me questions, and you will be able to show me your accounts, and I will help you, I will support you on the way to become a better trader. And in that private live chat, I post my trades, and I regularly update micro charts of the US market indices, crude oil, natural gas, and bottom and value stocks. We also look at gold miners and some hot stocks. So it's a great opportunity to see how that method works in real life. There are only 10 coupons available for that offer, and that offer is valid until Saturday, 20th April 2019. Thank you for your time, good luck with your trading, and please like this video on YouTube, because it really makes me think about something new to teach you. And thank you so much for everybody who put your likes. You really help me to move forward, and I really appreciate that. Good night.